Good morning, Paul Georgi from Allendale. It's February 4th, 2011. The grain markets this morning should open mixed. Lots of different news stories. None, I think, are very dominating, but the dollar probably is the strongest effector this morning. Dollar is up another 26 points after yesterday's rally. Crude oil is a little higher as well, up 55, and the gold market is a little lower, down $2.50. We got the USDA supply-demand report out next week. That's Wednesday the 9th, so mark your calendars on that. That'll be a big number that traders are watching for. One of the things they're looking for is lower ending stocks in corn. I think the consensus is going to be for anywhere from a 30 to 50 million bushel drop there, somewhere in that 700 area, and that's where Allendale is at this point in time. The markets in China are closed today. Malaysian markets are closed as well for their lunar holiday. That takes a little bit of excitement away from the market here this morning. The U.S. Grain Council has been in China last week doing their survey. They've reported overnight and that they expect China to import 9 million tons of corn, anywhere from 8 to 9 million tons of corn this coming year, and 6 million tons of DDGs. Different, certainly, than what we get from the USDA, but that's what their team has surmised from talking to people in China. The weather in South America is excellent. Maybe a little more rain in Argentina than what was forecast. That's the way the maps look this morning anyway. So that should be supportive for the crop. You've got Brazilian crop looks to be getting bigger and bigger and bigger, and soybeans, 70 million metric tons coming out of Brazil right now looks like a reasonable possibility. The soybeans in Argentina, however, the Rosario Exchange came out with their numbers yesterday. They're looking for 48.5 out of Argentina versus record production there in 2009 at 54.5. So several million tons under that, but it looks like Brazil is going to make up any losses there. Wheat market, Pakistan announced that they will export 2 to 3 million tons of wheat in the coming year. Also, Iraq should be in for some tendering for about 100,000 tons of wheat. We've still got the unrest in Egypt as they're the largest importer of wheat in the world, so that will keep the wheat market on edge here for a few more days. The open interest continues to increase in commodities. We had an increase in soybeans yesterday at 4,200, corn around 4,000, and wheat around 3,000 contracts. That's on top of a 50,000 increase in corn the first 3 days of this week. So continuing, somebody wants to own corn at these price levels, and we certainly don't see any change in that at this point in time. We do have Goldman rolls starting in the March contract here on Monday. Deutsche Bank has got a few contracts that they've been rolling. 1,500 or so is what's expected there on a daily basis, so nothing real significant, but that roll is going on right now. In the livestock trade, we've got the concern over dressed beef prices dropping here, the demand because of the Midwest snowstorm in Chicago and then the East Coast with the heavy snow there, that we're reducing retail demand, the higher price cuts, and that certainly causes a weakness in the cutout values and the profit potential for the packers, and that's definitely a concern. We'll have to go through this thing a few more days here to see what kind of clearance and demand we're actually seeing. But cash cattle did trade in Kansas yesterday at 105, 106. Cutout values were up slightly in the choice area and down 88 in the select. The hog trade, we had cutout values up 92 there. Cash markets weaker yesterday as the producers have been able to dig out and get some hogs moved. Packers have had problems moving pork out of their plants because of the heavy snow, so it's definitely a trickle-down effect there, causing problems of movement. The logistics of getting this pork out has created a dip here in hog prices, and the difference between cash and futures in the February contract as it goes off the board here in a few days. That is the reason for some weakness in the February contract. So we're keeping things monitored here very closely. If you got any questions, give us a call here at Allendale at 800-262-7538. Be happy to answer any questions you might have. We wish you a very successful trading day and a safe weekend. We'll talk to you on Monday morning. Thank you.